Hello students, I am Paresh Sirsat, Associate Professor, Jnanprasarak Mandals College and Research Center, Asagaon. Today we are going to discuss on computation of income from self-occupied house property. This is module number 5. In this module, we are going to discuss on procedure for computing income from self-occupied house property, deductions on account of interest on borrowed capital, and different situations of computing income from self-occupied house property. After watching this video, you should be able to apply provisions of section 23 subsection 2, apply provisions of section 24b, that is interest on borrowed capital, and you should be able to compute income from self-occupied house property. Now, for computation of income from self-occupied property, you must remember these two important points. Point number 1, whenever the property is self-occupied for own business or profession, no income is charged under the head income from house property. In that case, the income will be computed under the head income from business or profession. I will give you an example here. Suppose you have a house and you have your own business or a profession is set up in the same house property. You cannot consider the notional income from that property. Second is, when you have more than 2 house properties self-occupied, suppose a person is having 3 house properties, he can consider any 2 house properties for his own self-occupation, and third house, even if it is not self-occupied or even if it is not let out, it will be deemed to be let out and the income will be considered from that property. And this is very important point. From assessment year 2021 onwards, 2 self-occupied properties are allowed. Earlier to that, an assessee was allowed to have only 1 self-occupied property. So now from 2021 onwards, an assessee can consider any 2 houses of his choice for self-occupation. Now, these are the different possibilities or the situations for computing income from self-occupied property. First, property is used throughout the previous year for own residential purpose. That means a person is having a house and he is staying there, he is using it for his own self-occupation throughout the year. Second is, he is having a house but he cannot occupy that property due to his employment or job or business or profession at some other place. Third is, you have a part of the house is self-occupied and part is let out. That is, suppose a person is having 2 independent units, maybe on the ground floor 1 and the first floor. He is staying on the ground floor and he has let out the first floor of his house. That is the third situation. And the fourth is, he has only one house, he is staying there for part of the year and part of the year it is let out. Means suppose he is staying from maybe from April to December and from Jan to March it is let out. So part of the year it is self-occupied and part of the year it is let out. So these are the 4 situations and we will see how to compute income under each one of these situations. Let us see the first situation first. When property is used throughout the previous year for own residential purpose, this is covered under section 23 subsection 2a. Now, if you see here, gross annual value is nil and the municipal taxes are also nil, net annual value is also nil. So this is the most important point. When you have your own house, when you occupy a property for self-occupation, the net annual value we take it as nil. And under section 24, out of 2 deductions, section 24a, standard deduction, since we calculate as a percentage of net annual value, it is nil, and the only deduction that is allowed from self-occupied property is interest on borrowed capital under section 24b. So when you deduct from 0 something, your answer is always minus. So income from self-occupied property is always negative. Deduction on account of, now the only thing that requires an explanation in computation of income from self-occupied property is computation of interest on borrowed capital in case of self-occupied property. The interest on borrowed capital, that is current year's interest and pre-construction period interest, is deductible to the extent of rupees 2 lakhs provided following conditions are satisfied. We will see those conditions. Otherwise, the deduction is maximum up to 30,000. Means if these 3 conditions are satisfied, the deduction will be 2 lakhs. Otherwise, the deduction will be only 30,000. And this is the limit. 2 lakhs is the limit. That means suppose you pay interest of only 1,50,000, you will get deduction of only 1,50,000. Suppose you pay, all the conditions are satisfied and you pay interest of 2,25,000. In that case, the deduction will be limited up to rupees 2 lakhs. Let us see the condition first. The capital is borrowed on or after 1st April 1999 for acquisition or construction of the property. Now, in case of self-occupied property, the money can be borrowed only for 2 purposes, unlike let out property. Here you can borrow only for construction or for acquisition of the property. Second condition is the construction or the acquisition of the property should be completed within 5 years from the end of the financial year in which the capital was borrowed. And the third condition is the person who is extending the loan, the institution from where the loan is given, they should certify that the money is used for the purpose of either construction or acquisition. Now, suppose it is in case of refinancing, suppose a loan is taken from, let us say, from Life Insurance Corporation, and then you shift that loan from Life Insurance Corporation to SBI. Now, suppose the original loan you had taken from Life Insurance Corporation, if you had used it for either construction or acquisition, the new loan which you have taken from SBI, it will be considered as income, it will be considered as capital borrowed for the purpose of acquisition or construction. So, refinancing is also allowed. So, if these 3 conditions are satisfied, then the limit of interest is rupees 2 lakhs. Second possibility, wherein the property is closed and the person is staying at some other place. You have a self-occupied property, but you cannot occupy it, maybe because you are employed somewhere else or you have your business or profession somewhere else. If these conditions are satisfied, in that case the income from such house property will be considered as if it is let out. The only condition is the person should not have his own house at the place where he is working or where he is doing his business. He can stay in any house, maybe a house provided by the company or maybe in a rented house, but he should not have his own house at that place. And the second condition is he should not get any benefit from, or he should not let out the house which he owns at other place. If this condition is satisfied, even if you are not staying in your house due to your employment or business at some other place, you can consider that house as self-occupied. Third situation is when part of the property is self-occupied and part is let out. As I told you, suppose you have 2 units, 2 independent units. In that case, suppose you are staying in one unit and the other unit is let out. The place where you stay, the unit where you stay, it will be considered as self-occupied, and the unit which you have let out, it will be considered as let out. And the last situation is you are having one house, for part of the year you are staying there and for part of the year you have let out. In this case, the income will be computed as if that house property is let out, and we have already discussed how to compute income from let out house property. These are the references for this topic. Thank you.